Hi, this is Zak Mir with the Bulletin Board Heroes bumper edition on Thursday, the 7th of May. Starting with ADM Energy rather. Here you can see that the shares have broken this triangle nominally around the 2.3 pence level, and while we're above that, looking for further upside. We've obviously already retested the April peak towards 3 pence, but could get up to 3.5 pence, maybe 4 pence, which was support on the way down a couple of months back as a best case scenario at this stage. Some pricing stock to be seen in the Bulletin Board Heroes, at least compared to recent history, is Angus Energy. Here you can see that the shares have broken this near-term extended triangle base setup that we've had since, the end of November. And while we're above 0.6 pence, which is the broken resistance line, looking for a best case scenario target at the top of a rising trend channel from October up to 1.6 pence. The only proviso, I suppose, that one would say that, or the only caution really, is that we did actually have a false break in March, and the stock does have a habit of doing that, but at least, as I said, well above 0.6, there would appear to be further upside. Sticking with the oil area, and especially given the way that oil, the commodity, seems to have recovered, very strong daily candle for Columbus Energy today, hitting the 200-day moving average after the break of that triangle formation at 2 pence earlier in the week. The target here up to as high as 5 pence, the top of the December trend channel, and that's valid at least while we hold above the intraday low of today around 2.25 pence, i.e. the break area of that resistance line from January. Time frame on that, the next 2 to 4 weeks, we hope. Dukemount Energy, I think I covered it maybe a couple of weeks ago. That was when the shares were, I think, around the 0.7 pence zone, somewhere around that area. We've had a nice break to the upside since then. We've got all the near-term moving averages rising, so we're in the run-up to a potential golden cross buy signal between the 50-day and 200-day moving averages. As far as what the upside could be from this point, we are looking at probably or possibly a target towards 1.6 to 1.8 pence over the course of the rest of May going into June, and I suppose that would be valid at least while we remained above former February resistance around 0.8 to 0.85 pence in the near term. Obviously the RSI currently rather overbought, but this looks like it really has got some wind in its sails. Stock which I also covered from towards near the lows of the recent past was Dev Clever. I think it was around 1.2, 1.3 pence in December. Obviously we've climbed to dizzy heights since then, and we've hit the initial target, which was 8 pence, which I gave a month or so ago. The next level up, hopefully, would be the top of a rising trend channel, well, the steep one, which I'm drawing at the moment, which is going to hit or heading towards 14 pence, and that's valid while we hold above recent support in the 6 to 6.5 pence area. Ideally, there's no break back below that relatively steep line there at 7 pence, but one would expect, given how steep the ascent has been, that 6 to 6.5 pence could be revisited before further moves higher are seen. On to Galileo, which I think is also a sort of a recap situation. Here you can see that had a wonderful vertical move here for the stock after breaking 0.6, which is effectively the main neckline resistance on the daily chart. Situation now is that we're looking at a move towards dizzier heights indeed, back to where the shares were at the beginning of 2018, up to 2 pence. And that would be valid while we remain above that initial 2019 resistance of 0.75. Ideally, there's not even a break back below the floor of the latest gap, just under 0.8 ahead of a move to the upside. So looking pretty strong indeed for that particular share. Had a soft start today for Hemogenyx, but seems to have perked up quite well. But I suppose the point to note technically today is the way that we had potential support for the shares at the bottom of that gap to the upside at 4.5 pence, but we bounced above that, which is normally a positive sign. Also a key reversal to the upside so far as well, so breaking the previous day's low, and then presumably may even close above yesterday's high. If that is the case, then we can look for a partial or even full retest of the recent highs. Previous range was 7 to 11 pence, so above 7 pence, looking for at least 11, and obviously after that up to 15 as well. So keep an eye on that situation. Feedback is a stock which I've seen around the place in terms of being a potential recovery situation, but given its historic tendency to be rather volatile, I've shied away. But I do think that after the jiggery pokery we've seen over the course of April and May, the route higher from here may be relatively straightforward, i.e. we remain above that support line there from 0.9 pence, and while we're above that, head up to 1.8 pence, the top of a rising trend channel from March. Onto a stock which periodically appears on this particular video, Infrastrata. Hopefully on this occasion it will go up and stay up and actually deliver the goods as far as the bulls are concerned. We've actually broken the 200-day moving average here. The main resistance for the shares was in the low 0.3s, so above 0.32, let's say, and especially with a weekly close above the 200-day moving average, looking for a top of July trend channel target as high as 0.65 pence for the shares over the next month or so. Bluejay is back as well, which had a rather torrid time for the bulls until, well, especially over the early part of this year, but looks as though we've had a bit of a decent turnaround situation, breaking that neckline resistance of 4.5, also breaking the 50-day moving average at 4.5, while we remain above that 4.5 pence area, looking for at least 7 pence, which was support on the way down, and ideally up to 9 pence, which is post-December resistance. Stock which is new to me and which I was a bit late on, I suppose, has been Malvern. Here we've got, we're not that late in fact, but here we've got a resistance line break there, and the 50-day moving average break around 0.35 pence. Above that, looking for the 200-day moving average and post-December resistance at 1.2 pence. Nice exhaustion gap reversal as well there, so that does imply that the shares will have some decent momentum and heading towards maybe even up to 1.5 pence as a best case scenario. Just a couple of stocks to go now in this marathon session. Tern, which had a brief blip towards 16 pence last week. The good news, I suppose, over the last 24 hours is we've had a bear trap rebound from below the 200-day moving average at 8.85 pence. Above that, another chance of 16 pence for the stock. It's also positive that the shares have remained above RSI 50, the neutral level, despite that rather brutal pullback over the last week or so. Finishing off with something less dramatic, comes in the form of Xeros Technologies, Xeros Technology rather. Here we've got potential breakout through recent resistance and a resistance line there from November. The message here at the moment is while we're above that resistance line and the 20-day moving average at 0.86, looking for a retest of the main post-November resistance at 1.5 pence plus. If you're cautious on the stock, maybe you wait for the break of 1.2, 1.3 pence, but obviously that would not be quite as perhaps exciting as the setup that we have at the moment. That's it from me today. More updates on Monday.